The RBNZ is becoming increasingly concerned about rising inflation risks. Those are the words of my next guest, Rajiv Biswas of IHS, who joins me on the line now to discuss New Zealand. Rajiv, today's New Zealand inflation expectation report was largely in line with estimates, edging slightly above the midpoint of the RBNZ's target range. Can you expand on today's report for us?
The New Zealand Central Bank's quarterly survey of inflation expectations for the coming year actually edged up a little bit in this report from about 1.9% in the fourth quarter of last year to just over 2% in the first quarter of this year. So it's a slight pickup, but it's not a very big increase in inflation. And expectations in the survey for the two-year outlook ahead actually remained unchanged.
How then is the real economy likely to absorb this 2.03% average inflation in the coming year? Will what Governor Wheeler described as considerable momentum in the New Zealand economy support elevated inflation?
There's no doubt that the New Zealand economy is showing a considerable pickup in growth momentum. That's being helped in particular by very strong dairy export prices, and the dairy sector is a key part of the New Zealand economy and a very important export. In addition to this upturn in the dairy export sector, there's also been an upturn in construction activity, helped in particular by the reconstruction activity in Christchurch, which was affected by a devastating earthquake previously. So that's also acting to push up inflationary pressures. And as a result of all of this improving economic activity, the New Zealand manufacturing sector has actually been expanding for 16 months with a very strong order book still. So overall, the expectations shown in the central bank survey are that GDP growth will probably be in the order of about 3.2% this year, and also about 2.9% over the two-year outlook. And that's in line with what we're expecting. IHS is forecasting GDP growth of about 3.1% this year. So all of this is increasing the risks to inflation.
If today's report indicates no need to hike rates anytime soon, with interest rates already high by international standards, how does this fall in line with expectations for RBNZ action this calendar year?
I think that although the report itself doesn't show a very big increase in inflation expectations, nevertheless, the New Zealand Central Bank is increasingly concerned about rising inflation risks. And that's particularly because of the strong growth momentum in the New Zealand economy. The New Zealand Central Bank Governor has stated in January that he believes the New Zealand economy will require interest rates to rise to more normal levels as inflation pressures increase, and that's likely to happen sooner rather than later. At the moment, the central bank has maintained the overnight cash rate at an all-time low of 2.5% since March 2011. But now that growth is starting to gather momentum, the likelihood is that inflation will, the interest rates will actually be hiked. And this could happen very soon. In fact, the first rate hike could take place as early as the 13th of March, which is the day of the next central bank monetary policy statement. Our expectations are that there'll be about 50 basis points of tightening this year, possibly even 75 basis points, depending on how inflation develops.
Ending then on currency performance, the Kiwi dollar recovered from Monday's dip to rise against all majors in Tuesday's trading. Does sentiment on the New Zealand currency remain that of overvaluation, do you feel? Could this prove detrimental to the Kiwi's long-term performance? And how is this likely to translate into the real economy?
I think that the Kiwi dollar certainly has had quite a rebound based on the improving growth momentum in the economy and the underlying improvement in the export picture that we're seeing due to the strong increases in dairy prices. I think the Kiwi dollar has always been attractive in terms of yield play because of its relatively high yield. And now that there's expectations of rising interest rates through the course of this year, with the New Zealand Central Bank likely to be one of the at the forefront of the monetary policy tightening cycle amongst central banks, this will also help the attractiveness of the Kiwi dollar. Given the economy is also strengthening, all of these factors are playing into a cyclical upturn in the Kiwi dollar. We do expect that because of the US dollar also improving as the Fed tapering continues, that the Kiwi dollar will probably remain relatively stable against the US dollar this year, but still relatively highly valued because of its attractiveness for yield play. And when you look in the contrast between the New Zealand dollar and the Australian dollar, with the Australian dollar facing some downward pressures because of lower interest rates and economic difficulties in Australia, that increases the relative attractiveness of the Kiwi dollar at the moment. At the moment, because of high global commodity prices for dairy products, I think this is a cyclical upturn. A lot will now depend on how commodity prices play out for New Zealand's key commodity exports. So we are likely to see that, probably in 18 months' time, there could be, again, some downturn in the Kiwi dollar relative to major currencies such as the US dollar and the euro.
Rajiv Biswas there, Chief Asia Pacific Economist of IHS. That's all we've got time for right now. Thank you for watching.